Hello dear viewers, welcome to my YouTube channel Inspire and Empower with Atif. Friends, you have heard about the importance of Finance and Accounts Department. The importance of the Finance and Accounts Department cannot be overemphasized. No wonder seasoned finance professionals are sought after and they are paid handsome packages in different organizations. HR is said as the heart of business, and then finance is being said as the blood of a business. From this statement, we can draw an inference and get an understanding of how important and critical the role of Finance and Accounts Department is. This video basically is an attempt to help out the job seekers who are actually interested to make a career, who are serious to make a career in the beautiful space of finance and accounts. Basically, the trainee level accountant job who are aspiring to make a career as a trainee accountant. I hope this interview will really be helpful, this mock interview. In fact, I would go on to say that this is not a typical mock interview, but much beyond a typical mock interview, where I would not be asking only questions and the candidate would be answering, but we would engage in a sort of a conversation. We would engage in a dialogue. We will go deeper into the subject. At the end of the day, our purpose is to help my viewers, our viewers, to clarify the concepts, understand in a deeper way. The greater the understanding, the depth of the understanding will help you hopefully when it is your time to face the interview in a real life situation. You would be acing the interviews. With that intent, we want to get started. My dear viewers, at this point of time, I get reminded of a beautiful sentence. Due credit to whoever who came up with this. What is an interview? Someone, said so beautifully that an interview is not an interrogation, but an exploration of talent. My dear viewers, this is Atif. I am an HR professional. I have served for almost 15 years in the industry as a human resource professional. I have been fortunate enough that I could interview hundreds and thousands of people so far in my professional journey. And I've interviewed a lot of chartered accountants, a lot of finance and accounts senior professionals. I've been fortunate to even interview a lot of freshers who are aspiring or who wish to make a career in finance and accounts. So we would be diving deeper into the fundamentals of finance and accounts, which are the frequently asked questions during the entry-level jobs for finance and account professionals. Let's say for a trainee accountant level job, we will dive deeper. Let's understand. It's a beautiful function of finance and accounts where the finance professionals, they talk about sourcing of funds, the deployment of funds, the optimum utilization of funds. They talk about ROI, return on investment. They talk about IRR. They talk about liquidity ratios. They talk about debt equity ratio, and so many beautiful metrics which are basically used to gauge the health of a business. And it's not just limited to a business, whether it is a trust, public charitable trust, or an NGO, any organization. Beyond business, the finance and accounts people have a very critical role to play, and they play a very, very important role in guiding the management to take key decisions for the growth of the organization, to take very conscientious and informed decisions. So to get started, let me introduce my guest today, my interview candidate, Mr. Yahya.
Thank you, sir.
Mr. Yahya has cleared his graduation, BCom, and currently he is doing his MBA with a specialization in finance. We hope and pray that you come out successful, you pass with flying colors, okay, in your MBA.
Thank you, sir.
So Yahya, feel very comfortable because as I said, it is not an interrogation, but it is an exploration of talent. Let's be comfortable, let's learn from each other. And it's not that I always, help others to learn. It's also you guys who also help me learn. Even as they say, never stop learning, because life never stops teaching. People even learn from, kids. If you have the ears and the eyes and the mind to learn, so there's no stopping. So let us get started. We will engage in a conversation. We'll try to dissect a lot of concepts. This should help the upcoming generation, the people who are interested to make a career in finance and accounts. I hope it will help them in a great way. So a typical way of starting an interview is, please introduce yourself.
Thank you very much, sir. First of all, for giving me the opportunity. I feel really honored to give this mock interview. As you know, sir, my name is Yahya Ahmed. I am from Assam, the Hujai district. I'm a student. Currently, I'm pursuing MBA. I have 3 siblings. I'm the elder one in family, and my youngest brother currently working in Kuwait, and the next youngest one studying in class 9 standard. My mother is a homemaker, and my father runs his own retail shop. That's all from about me, sir.
Okay, thank you. Yeah. As I said in my intro, finance and accounts people, they are handsomely paid.
Yes, sir.
By a lot of organizations. The pay packages are very good.
Yes.
Why do you think they are paid so handsomely?
Sir, finance and accounts, as I know that accounts and the finance department. Accounts is itself it means the language of business. It means the recording and analyzing and summarizing the transactions that happens every day in a business. And the finance is the art of managing the money. So finance people manage the funds in such a way which benefit the organizations, and it helps in increasing the profit. So the finance and the accounts people, they togetherly work for the betterment of the organization by managing the funds in an effectively and efficient way. They utilize the resources in such a way which helps the organization to grow and expand the business and overall benefit, so that as we know that every business organization is established to earn profit by satisfying the needs and wants of the customer. So these 2 departments manage the funds, runs the funds, they raise the funds and application of funds in such a way which helps the business organization satisfying the people's needs and earning profit as much as possible.
Okay, because as I said, let's engage in a conversation.
Yes, sir.
It is a mock interview, but it is beyond a mock interview as well. So let me add a few points to this particular question.
Yes, sir.
As you rightly said, the sourcing of funds, the deployment of funds,
yes,
the borrowing cost has to be lower.
Yes, sir.
The profitability has to be high, and the costing has to be low.
Yes, sir.
The profits have to be more. So it's all about permutations and combinations,
yes,
different
sir.
Permutations and combinations. Because of the financial acumen,
yes,
the insights which these people carry, they're able to guide the management. This kind of a sourcing is better because you are borrowing at a lower cost.
Yes, sir.
They are able to tell you, give you a snapshot of the liquidity of the business,
yes, sir.
so that you are able to meet your current liabilities.
Yes, sir.
Okay, they run a lot of metrics to
yes,
gauge
sir.
the health of the business. Okay, so these particular deployment of funds hasn't fetched us the kind of return that we were anticipating,
yes,
but certain other businesses have actually given us way greater, profits and returns compared to certain deployment of funds. Then at this point of time, finance managers and professionals can say the management, hey, hang on, this deployment of funds is not giving us an encouraging return.
Yes, sir.
Perhaps we need to divert these funds
yes,
to other more profitable avenues that are available for the business.
Yes, sir.
So that's why it can be rooted
yes,
to other businesses. So that's how certain businesses, they can talk about inventories,
yes,
where inventories, because of too much of inventory,
yes,
how it is affecting the bottom line, all these things, these they can provide these kinds of insights. So that's why they are paid handsomely. They are able to, as you rightly said, they are able to guide the management with regard to earning more profits, with regard to earning profits at a quicker duration. They are able to guide the management and show the management different profitable avenues where money can be invested and more profits can be earned. They can also indicate the management that certain ventures are actually turning out to be loss making, or are stagnated business where it's no point for further investment, so we need to withdraw from such businesses. There is a saturation point maybe, or maybe we need to bring out some innovation so that we can overcome this kind of a saturation. Financially, it's not a feasible venture. So that's how kind of guidance is expected, and that's why they are being handsomely paid.
Sir.
Do you agree to that?
Sir, I do agree, sir. That's
okay.
Absolutely.
Let's go to the fundamentals a little bit. My dear viewers, I mean, this will be really helpful for you. Fortunately, I think I'm also a commerce graduate, and then I did my post-graduation in business management with a specialization in HR and marketing. So I was exposed to the fundamentals of finance and accounts, the basics. So because I have that background, so I really can relate to all this. I'm enjoying this mock interview. So let's go to the basics. What is accounting? In your view, what is accounting?
So accounting is a system of recording business transaction. It means recording, classifying, summarizing, and interpretation of business transactions. And this recording helps the management to take informed decision which are basically takes by the management are on the basis of the transactions recorded by the accountant. So in simple words, we can say that accounting is a language of business, which means the recording and analyzing and classification of business transaction.
Okay, I would just like to add to what you said. Accounting, we studied way back when we were in the college. Accounting is the art of identifying, summarizing, well, before summarizing, classifying. Accounting is the art of identifying, classifying, summarizing, and recording the business transactions in a way so that the true and fair business position of an organization can be ascertained.
Yes, sir.
Okay, so you are able to find out how healthy the business is.
Yes, sir.
So that's the help and the value addition which finance and accounts professionals they bring to the table. That is accounting. Okay. Now moving on again to the fundamentals, the golden rules of debit and credit. It's such a beautiful concept. Okay, come on, help me understand it.
So golden rules of debits and credits tells us about three types of accounts. It says that personal account, real account, and the nominal account. Personal account, which is related to the individual persons and the firms, companies. Personal account says that debit is the receiver of the benefit, credit is the giver of the benefit. Real account, which is related to the assets and liabilities of the business, which says that debit what comes in and the credit what goes out. And the nominal account, which is related to the all expenses, losses, and the gains. And it says that debit all expenses and the losses and credit all incomes and gains.
Okay, perfect. That's a beautiful answer. Okay, so many of the candidates I interview, when I keep interviewing them, they get stuck and they lose their sight. I mean, what are the golden rules, golden rules of debit and credit? So this is one answer, my dear viewers. This is a very beautiful answer he gave. So once your fundamentals, once you understand if an individual, please remember that what comes in and what goes out, that's when it is a real account. When it is a personal account, please remember the receiver and the giver. And when it is a nominal account, please remember the expenses and losses. And then here on the other side, we have the incomes and the gains. Try to kind of internalize this and you won't find it difficult to pass journal entries. I hope so. Okay. Moving on,
Yes, sir.
you must have heard about BRS.
Yes, sir.
What is it?
So BRS stand for Bank Reconciliation Statement.
Okay, what is this bank reconciliation statement?
So bank reconciliation statement is a statement which reconcile the difference between the balance shown in the cash book which is prepared by the company and the balance shown in the passbook prepared by the bank.
So who prepares BRS?
So BRS prepared by the company itself,
Yes.
as well as the bank also prepared their passbook.
Okay.
So we need to prepare the BRS to see if there is any differences, because there sometimes the difference arises, and the objective to prepare the BRS is to identify and rectify the difference, that from where the difference is coming from. There may be reason a check is issued but dishonored.
Yes.
So when a check is issued, already the company has recorded in its book, but dishonored, that's why the bank has not recorded. So there is a difference arises. At the
Yes.
same time, when the deposit is in transit, there that may be a reason where difference arise. Errors and mistakes may be arises. So to identify and rectify the differences between the company's cash book and the bank's passbook, we prepared BRS.
Perfect. Let me add here
Yes, sir.
that this word reconciliation,
Yes, sir.
many people use the word RICO. So in industry, the word RICO is also used. So bank RICO, it basically means to reconcile the differences. Why the differences? As you rightly said, check dishonored and many other things. But as you rightly said, also because of errors. And we studied during our college days, errors of omission, errors of commission, and duplicating errors, if you can recall that. So because of such errors of omission and commission and duplication, the balances do not match. So, and also because, as you said, sometimes because of the time factor, check being issued, check not realized, sometimes check gets bounced and all that. That's why. So to ascertain the exact position, okay, as far as your book is concerned on the side of the company and what the bank says, this statement actually is an important tool to know where you stand as far as your finances are concerned in both the books, and this reconciliation takes place. Okay, so that's about bank reconciliation statement. Yahya, let's go back to again some of the accounting concepts.
Yes, sir.
As I say, the fundamentals have to be very strong.
Yes, sir.
If our fundamentals are not strong, then obviously, if the base is not okay, we cannot, have a skyscraper, right?
Yes, sir.
So let's go to some of the accounting concepts which are very important.
Yes, sir.
I've found a lot of candidates when I've interviewed, they're not clear with the accounting concepts. It's very important because if you don't understand the concepts properly, if it is not deeply rooted in your system, you won't be able to pass the required journal entries correctly.
Yes, sir.
So let us start with one concept of dual aspect concept.
Yes, sir.
What is this concept all about?
So dual aspect concept is an accounting concept which says that every transaction has two aspects. It says that if one account is debited, then there must be another account which should be credited. It helps to analyze and find out the accuracy as we know that the debit must be equal to the credit. So dual aspect concept says that the transactions have two aspects. One account is debited, then there must be another account which is credited. So we follow the dual aspects to match and to find out the accuracy of the transactions recorded in the business. And if there is any error, then we have to find out the error, that if debit is not equal to the credit, then there is error occurred and we have to find out that error.
So yeah, that's the correct answer, what you talked about, the dual aspect concept. But I just want to go deeper into this.
Yes,
I want to bring into the discussion the double entry system of bookkeeping, where, it says that for every debit entry, there has to be a corresponding credit entry.
Yes.
Even I want to again bring into the picture the golden rules of debit and credit.
Yes,
please bear this thing in your mind, that debit and then credit, and then debit entries corresponding credit entries. When you said every debit would have a corresponding credit entry, please remember every transaction would have two equal and opposite effects. Okay, two equal and opposite effects. And remember, accounting is so beautiful. It talks about the cause and effect relationship. Okay, and that's how you see. If you go deeper and you dissect the concept, you will really find this really very interesting. When there is a giver, there is a receiver. That's the personal account. When something comes in, something has to go out. That is the real account. If there are expenses and losses, on the contrary, there can be incomes and gains. So everything I see a flare of dual entry, double entry, and dual aspect in everything, whatever we have been discussing. This is the beauty of accounting. It has been designed in such a way that there are permutations and combinations, and the system is such that accuracy is achieved. And that's why even if we go deeper into the subject, when we say a balance sheet, we have assets on one side and we have liabilities on the other side. Why do we say it is a balance? Because it ultimately, the figures that tally. I've seen a lot of accountants, they are sometimes, in a lot of tension. What happened? It has to be tallied. Okay, the balance is not tallying, it has to be tallied. So once there is a tally, they are able to sigh. A huge air of relief is there. So that is the beauty. I hope that really makes more sense.
For commerce student, when balance sheet match, it is the big satisfaction. As liabilities and the assets are when equal. For commerce student, it is a big relief.
And that's how the whole journey starts. From passing the journal entries, and then you move on to preparation of the ledger balances. The ledger accounts, and then you have the trial balance. Again, there is a matching of the trial balance. Again, then you move to a manufacturing account or a trading account, and then a profit and loss account. It's all about matching the balances because it's a dual aspect concept. This is such a beautiful concept, right? So that's about the dual aspect concept. Okay. Now there's another concept here, which is the accrual concept. What is this accrual concept?
So accrual concepts is an accounting concept which says that all revenues and expenses which are occurred should be recorded as and when it is occurred.
Yes, correct.
Sir, it is not, regardless of the things that whether cash is paid or cash is received, it should be recorded as and when it is occurred. Either it is credit or it is cash, but it says that every incomes or expenses should be recorded as and when it's occurred or earned.
Yes. That's the accrual concept. We may realize the money later because since a transaction has taken place, it needs to be recorded. So there is no pending. Immediately it is to be recorded. Fine. When you were talking about this accrual concept, I got reminded of the concept of conservatism. Okay, what is that concept of conservatism?
So conservatism concept says that all probable losses should be provided for or should be considered, and all probable gains and incomes should be ignored. It means that the profits should not be overstated. So we consider all probable or anticipate all the losses, and all probable incomes should be ignored. So conservatism.
So that's the tagline, right? Anticipate losses, but expect no gains. That's the tagline which a lot of people they keep saying. So let us not be too much ambitious about business profits. And as you know, any business is, any organization for that matter, is subject to a lot of contingencies. There can be problems and issues, market instability and stuff like that. So that's why there is conservatism principle. Okay, so that's another beautiful concept. Okay, so here we have talked about accounting, we have talked about accounting concepts, we have talked about the importance of finance and accounts professionals. These are very important. Let us move on and let us discuss certain other things, like what is a contra entry?
So contra entry is an entry which affect two accounts at the same time. When cash and the bank affects at the same time, we says that we pass a contra entry. It means if cash is debited, then bank is credited. So the contra entry affects two accounts of cash and the bank at the same time.
Okay, yes, that's right. And there is something called a suspense account.
Yes,
what
sir.
is a suspense account?
So suspense account is a temporary account which we open when there is an uncertainty about the heads of the accounts. So we put all those transactions under the heads of the suspense account, and later on when we resolve all the uncertainty, then amounts are transferred to the proper heads of the accounts. So it is used to record transactions when there is an uncertainty about the heads of the accounts. We open an account which is called suspense account.
Right. It is also called as a temporary holding place.
Yes, sir.
It is also called a temporary holding place when you are not able to ascertain actually under which head it is to be debited or credited for the time being.
Yes, sir.
So temporary holding place is a suspense account.
Yes, sir.
Okay. What is a break-even point, by the way?
Sir, break-even point is a point at which the total revenue is equal to the total cost. It means no profit, no loss situation for a company where its TR is equal to TC, means total revenue is equal to total cost. At this point, the company has to decide whether they further produce or continue their activities, or they just need to end up, because at this point it says that no profit, no loss situation for a company.
Okay, so it's a very important metric,
yes,
basically an important indicator.
Yes, sir.
And very important key decision needs to be taken.
Yes, sir.
Where the business needs to head, whether it will be profitable.
Yes,
okay,
yes.
So that's how certain kind of analysis can be done.
Yes.
Okay, so Yahya, let's move to another concept,
yes,
which is COGS.
Yes,
COGS.
Yes,
What is this COGS?
Sir, COGS stands for cost of goods sold. Cost of goods sold, it says that all the direct cost which involved in producing a goods or service which are being sold, and there is a formula of calculating cost of goods sold. It says opening inventory plus purchase minus closing inventory. So COGS stands for cost of goods sold.
Okay, that's wonderful. And then just bring in COGS into the picture.
Yes, sir.
And help me understand how to calculate gross profit.
Yes, sir. Gross profit, total revenue minus COGS. If from total revenue we deduct the cost of goods sold, then we get gross profit.
Okay, that's wonderful. Now let us connect this concept of COGS.
Yes, sir.
Okay, now you have these variables, right? You have the revenue, you have COGS, you have gross profit. Now let's move to another ratio.
Yes, sir.
The GP ratio,
yes,
the gross profit ratio.
Yes, sir.
That is also an important indicator of the health of a business,
yes,
the profitability of a
yes,
business,
sir.
right?
Yes, sir.
So how do you calculate GP ratio?
The GP ratio is equal to gross profit divided by net sales into 100.
Perfect. Perfect.
Yes, sir.
That's the right answer. Okay, moving on. There are concepts like abbreviations,
yes, sir.
LIFO and FIFO.
Yes, sir.
What are these, LIFO and FIFO?
Sir, LIFO stands for last in, first out. So last in, first out, and the FIFO stands for first in, first out. LIFO, the items purchased in the last are sold in the first, and the first in, first out items are purchased in the first, also being sold at first. So in accounting, LIFO and FIFO are last in, first out, and first in, first out.
However, you missed out on an important thing which I was expecting. These are actually inventory valuation methods.
Inventory valuation method.
Okay.
Yes, sir.
LIFO and FIFO, these are inventory valuation methods. Yes. You missed out on another inventory valuation method. Can you recall the third method? Besides LIFO and FIFO, what is the other method of inventory valuation?
Inventory valuation. Sir, inventory turnover?
No.
Okay.
It is the average cost method.
Average cost method.
Okay. In LIFO and FIFO, as the name says,
yes, sir.
The last in and first out. And then you have formulas to calculate.
Yes, sir.
The inventory value is being calculated, because there has to be a value attached to inventory
Yes,
to
sir.
show in the books,
Yes, sir.
so that you are actually showing the true and fair position of the business.
Yes, sir.
So LIFO and FIFO,
Yes, sir.
it's about the in and out, the timing.
Yes, sir.
And average cost method is, it's not the first or the last, but the average cost, which is actually considered for showing in the books of accounts. The inventory amount and the valuation is being calculated. Okay.
Yes, sir.
Now again, this reminds me of another concept. What do you mean by apportioning the costs?
Yes, sir.
As if I say, for example, 10 lakhs,
Yes, sir.
I need to apportion this cost.
Yes, sir.
When I say that, what do I mean?
Sir, apportion, the term is, I understand that means segregation.
Yes.
Segregation of cost.
Absolutely.
Yes.
Absolutely. Why do you think this is important? And how does its role come into the picture?
Sir, segregation of cost, it means the cost associated with a particular department, which means how much cost is involved in a particular department, and from that department how much revenue is being earned. So if we segregate the cost from department to department, then we get a picture to understand that yes, from that department we're spending that much of money and getting return that much of money. So that I understand, sir. But
okay, let me give an example.
Yes, sir.
Okay.
Okay.
Nice attempt. Let me give an example. Suppose I am using a building.
Yes, sir.
Okay. I'm using a building, but there are many departments,
yes,
which are together housed into that building.
Yes, sir.
I have the logistics department, I have the HR department, I have the finance department, I have so many departments, I have the R&D department, all fitted into one building.
Yes,
okay. So there is an electricity bill of, say, maybe any arbitrary figure,
yes,
maybe 2 lakhs.
Yes, sir.
So it's not that I will debit this entire, expense,
yes,
to a particular department.
No, sir.
I need to apportion the costs,
yes, sir.
because, and maybe we can also find out, we can have submitters, being installed, and we can find out
Yes, sir.
based on the units of energy being consumed.
Yes, sir.
And then suppose a particular department, we will debit 10% of the total bill,
Yes, sir.
electricity bill.
Yes, sir.
Another department will debit, say, 15%,
Yes, sir.
and that's how it is.
Yes,
So this is being done to actually
Yes.
apportion the costs to its rightful cost center.
Okay. Yes, sir.
So that again, we have to do a proper and scientific assessment
Yes, sir.
of the business health.
Yes, sir.
So the costs have to be allocated
Yes, sir.
to where it deserves to be.
Yes.
It's not that, it's an overhead, and then you actually, by mistake, you put the financial load on any department,
Yes.
leaving aside the other departments.
Yes.
So that would not be apportioning of costs. This is just a simple example. There can be hundreds of examples,
Yes.
which we can talk about and
Yes,
discuss, right?
Yes, sir.
That is apportioning of costs. Okay, Yahya,
Yes, sir.
let's talk about a little bit about journal entries.
Yes, sir.
Okay. Suppose there is a business,
Yes, sir.
and the business owner withdraws money
Yes.
amounting to rupees 1 lakh,
Yes, sir.
but for personal use.
Yes, sir.
What will be the journal entry?
Sir, when the owner withdraws money for his personal use, we pass the journal entry drawings account debited to cash account if cash withdrawn, or to bank account.
Yes, that's right. Okay. And what about the concepts of sales return and purchase return? What do you understand by sales return,
Yes, sir.
purchase return?
Yes,
I will try to confuse you by saying return inward
Yes, sir.
and return outward.
Sir.
What are all these things?
Okay, sir. Sir, purchase return. Talking about purchase return, when debtor purchase something and he returns back. That means for the seller, it is a sales return.
Now, are you talking from the perspective of the company,
Yes, sir.
or are you talking from the perspective of the seller?
Sir,
You talk like an accountant
okay, sir.
being employed in an organization,
Yes, sir.
and you are maintaining the books for the
Yes.
organization.
Yes, sir.
Now you talk from the perspective of an accountant.
Okay, sir. Sir, when we sold something to our buyer and
Yes.
we get return,
Yes.
then it is a sales return.
Is it a sales return?
Yes, sir.
Okay.
return, it's inwards.
Okay.
It's return inwards.
Yes,
That
it's
means
return inward.
it's
Yeah.
a sales return account debited to from whom we are getting XYZ. Sales return account debit, then accounts receivable.
Is it sales return? Or what do you write? Is it sales account debited?
No, sir.
Ah.
Sales return account.
Sales return
Yes,
account.
sir.
Okay.
Sales return account debited
Hmm.
to receivable from whom we have received.
Okay.
Sir. So it is a return inwards.
Return inward.
Yes, sir.
Okay.
But when we purchase from our creditor and then we return, it's a purchase return, sir. Then we have to reverse back the.
So what will be the entry?
So entry will be the creditor's account debit from whoever is XYZ.
Yes.
And then purchase account.
Okay.
Yes, sir.
Okay. And from the overall purchase, we have to subtract.
Yes, sir.
The amount which has been returned.
Yes, sir. When we purchase something from our creditors, we write purchase account debited to XYZ.
Yeah.
And when we returned it, then we reverse it.
You reverse it.
Yes, sir. We reverse it, and it's automatically get deducted.
So from the perspective of an accountant,
yes, sir.
If I say it is a return outward, what does it mean?
Return
from the perspective of the accountant?
Yes, return outward means the purchase which we have purchased from our creditors.
We have returned.
It's returned outward.
Okay. And what is return inward then?
When we sold something to someone.
Okay.
And we received it, then return inward.
That's return inward.
Yes, sir.
Okay, that's right.
Yes, sir.
Okay, yeah. Now let's talk about liquidity. What is liquidity?
Sir, liquidity is the ability of a company to meet its short-term liability or short-term obligation. In other words, it also says that how quickly the current assets are convertible to cash without significantly affecting the value.
Exactly. I wanted to hear this, how easily and readily
yes, sir.
It is convertible to cash.
Yes,
that
sir.
is important.
Yes, sir.
Right. And what is depreciation, by the way?
Yes, sir. So depreciation means reducing or declining the value of fixed assets due to wear and tear, obsolescence. So because of the uses, the value of assets gets depreciated, and reducing the value of assets is called depreciation. There are various methods by following which we calculate the amount of depreciation. Like for example, straight line method, diminishing value method.
Okay, exactly. So depreciation, what happens? A fixed asset,
yes,
the value, to ascertain the value is the right value,
yes, sir.
Is the work of the finance and accounts professionals, yes, right? To ascertain the right value.
Yes, sir.
So any fixed asset,
yes, sir.
The value of it will never be constant.
Yes, sir.
Due to wear and tear, as you rightly say, due to obsolescence.
Yes, sir.
There is a decline in the value. There is a gradual decline,
yes,
and this decline is actually accounted for.
Yes, sir.
And there are methods, different methods
yes,
to basically calculate the depreciation,
yes,
and then ascertain the value of the fixed asset.
Yes,
what is it called after the useful life of an asset comes to an end, and the value what we derive? What it is called?
Sir, useful life.
The useful life of an asset comes to an end,
yes,
after
sir.
providing for the depreciation.
Yes, sir.
Finally, the useful life of a fixed asset comes to an end.
Yes, sir.
At the end of it, what is the value that we get of that asset?
The scrap value, sir.
Scrap value. What is the other name for scrap value?
Other name.
Salvage value.
Salvage value.
The
yes,
salvage value or the scrap value.
Yes, sir. Yes, sir.
Okay.
Salvage value.
So Yahya,
yes, sir.
I really enjoyed this mock interview
yes, sir.
conversation with you, and with this I would like to close for today.
Yes.
And I sincerely hope that this will really benefit a lot of aspiring candidates,
yes,
job seekers, to ace the interviews.
Yes.
And I hope that people will write to us in the comments section, and whatever queries, maybe we can also sit together another day,
yes, sir.
and we can go deeper into the subjects
Sure.
based on demand of our viewers.
Yes, sir.
Before we close, your final thoughts on how it went. How do you feel?
Sir, it's a really, really good experience and a beautiful experience.
This was your first
Yes,
interview,
yes, sir.
mock interview,
Yes, sir.
live.
Yes, sir. This is my first interview, mock interview, live. And
okay.
the beautiful thing is, I felt I got so comfortable, sir, to talk with you, and the way you explain the things after my explanation, that's really helped me to deeper into the particular topics. So I really thank you, sir, for this mock interview and inviting me.
It's my pleasure. It's my pleasure. Thank you for your time as well, because
sir.
your time is important too.
Thank you, sir.
And then you invested your precious time.
Thank you, sir.
And at the end of the day, let's hope that our efforts will pay off.
Yes, sir.
And a lot of our viewers, a lot of the aspirants
Yes, sir.
would get some guidance through this video.
Sure, sir.
Thanks for coming.
Thank you so much, sir.